Ratio says it's time to get out of silver. There are two methods of stacking silver, really. There's the long haul, where people stack and hoard silver for decades. That's me. And the short run, where we buy silver, hold it for 2 to 3 years, and cash out. Many people lately have been doing that. They bought a good amount of silver 2 or 3 years ago, and now they're cashing out. They're really dumping their silver. Fine, that's not my plan. I'm a long haul guy, but in this video, I'm going to show you how to do this short haul correctly. Now, there's two things we have to look at. First, this is from goldsilver.com, and it's just explaining the gold to silver ratio. So this says the gold to silver ratio measures the number of ounces of silver required to purchase 1 ounce of gold. That makes perfect sense. By measuring the change in the gold-silver ratio over time, investors hope to estimate the relative valuations of the two precious metals, thus informing their decisions of which metal to buy or sell at a given time. I'm going to say that in normal English. When the gold-to-silver ratio tightens, when you need less ounces of silver to buy 1 ounce of gold, then you swap out your silver for gold. It's really quite simple. So because this article says, because gold to silver prices change based on the law of supply and demand, the gold to silver ratio has fluctuated over time. Before the adoption of the fiat currency, national currencies were often backed by gold or silver. This meant the gold to silver ratio was far more stable in the past than it is today. That's an understatement. Indeed, it would often be fixed at specified exchange rates relative to units of national currency. These exchange rates would change based on the perceived economic strength of the nation. So in 1913, when the Federal Reserve was required to hold gold equal to 40% of the value of the currency that it issued, a significant change then occurred in 1933, when the president at that time, Franklin Roosevelt, suspended the gold standard to stem redemptions of gold for the Fed. It was then illegal to hold, for private citizens to hold gold. So this, along with other measures, weakened the link between the dollar's value and gold, and many observers view this event as the moment when the US dollar became de facto a fiat currency. So presently we're living in that world of fiat currency. So look, here's a real world example. It's if you have, to illustrate gold to silver ratio, here's a scenario. Let's say gold is trading at $1,500 per ounce, $1,500 for 1 ounce of gold, and silver is trading at $15 per ounce. Clearly, the gold to silver ratio would be 100, because it would take 100 ounces of the silver to get that 1 ounce of gold. Luckily, today we're not at that, right? Today we're actually, our ratio is tightening. And this again there's a chart on this website, Gold Silver Ratio. I suggest you check it out. This website is not sponsoring my channel. I'm just telling you what I found. And this is pretty cool, because it says that today the gold to silver ratio really did drop just in the past week. We're down at 75.5 ounces of silver for 1 ounce of gold. Now, for a long time, we were hovering between 84 to 86 ounces of silver. And now presently we're down to 75. That's really tightening up. So many people who follow the gold to silver ratio, they say that anything really between 75 and 70 is a good time to swap out your silver for gold. And I would like it to be lower for me. Again, I don't do the short haul. I don't do the 2 to 3 year runs for silver. I've been doing this for years, and anyone who's been, with me doing this for years and decades, you wait for really a drop like what happened in 2011, when we dropped it down to, I want to say, I'm going to pull it up right now in front of me. 2011, the gold to silver ratio dropped down to 35 ounces. Can you just wrap your head around that? 35 ounces of silver. 35 of these. That's like a little more than a tube and a half. A tube and a half of silver can get you an ounce of gold. And that could happen again. 2011 was not long ago. That's not that long ago. That's in all of our lifetimes. It's not that long ago. And that will certainly happen again. So many silver stackers who are in it for the long haul like I am, we wait for that. Now that's my ratio. Let that drop down to 35 ounces for 1 ounce of gold. That's what I'm talking about. But if you are if you're stacking silver for a short run, like 2 to 3 years, which many people are, I know a lot of you listening are rolling your eyes, thinking, "Oh, there's, no, that's not me, that's not me." But visit your local coin shop. People are cashing out. They're dumping their silver, and really, if you've been watching my channel lately, there are ways to do that correctly. When certain reports come out, silver jumps or drops. When Wall Street and when announcements come out that are going to impact Wall Street, silver moves. And if you know how to do it correctly, if you know what you're looking for, there are ways to cash out without just doing it blindly. There are ways to cash out when the time is right. So at a 75-to-1 ratio, many people would say that that's the ratio to get rid of your silver. For me, I'm absolutely the long haul guy, especially when I see what's coming down the pike for the rest of this year in 2024. There are many moving pieces that are going to continue to impact this ratio of silver to gold. And if all plays out like it looks like it's going to play out, and I say that biting my nails because there are many of these pieces that are going to impact the economy in a big way. If things really do play out, then it really is quite possible we see the silver to gold ratio tighten to what we saw in 2011, which is a sweet deal for those of us who've been stacking silver, because I'm loaded. I'm loaded with silver, and I'm ready to cash out for gold when that tightens up. Absolutely.